Hello, everyone. This is Justin Smythe from NextBigTrade.com. This is your weekly index review for April 19th, 2024. Starting off with the S&P 500 on the weekly chart, you can see the S&P 500 lost over 3% for the week. This was the worst week for the stock market in 2024. And as we've been discussing in recent newsletters, there's been lots of deterioration in the stock market. Before this selling occurred, there was lots of indications that we were heading into a correction, and really the selling finally transitioned into the mega cap stocks that had been holding up the stock market this entire year. And when this finally occurred this week, the market finally buckled under all of this selling pressure in the largest stocks in the stock market. So overall, now it's very apparent to the rest of the market that we are in fact in a correction, and it just remains to be seen how long this correction will occur for, and what kind of opportunity will this correction produce once it's over. Keep in mind that stock market corrections create the best buying opportunities in the stock market every year when they occur, and the best time to buy stocks is after these corrections in the S&P 500. The last great buying opportunity that we've witnessed was all the way back in October 2023, when the stock market came out of a 10% correction that occurred for about 3 months. So this was a long correction that dragged the stock market lower, but lots of new leading stocks and leading sectors emerged from this correction and produced a major uptrend. So, this correction is going to end up producing a huge opportunity as well, but we need to be patient, let it play itself out, and see what kind of stocks start breaking out once this correction is over. Moving on to the daily chart, you can see that there was 5 days of selling last week, with the fifth day actually having some heavier volume on Friday. But overall, basically, if you look at the 20-day moving average, the green line, in terms of stage analysis, you can see how the stage 2 uptrend above the 20-day moving average transitioned, from stage 2 over here to stage 3, against the 20-day moving average, and now we're starting to decline below this moving average in stage 4 and against the 20-day moving average. But again, we've basically transitioned from a uptrending market to a market that was moving sideways for about the last month, and now we are starting to move lower in a correction. If you look at the NASDAQ 100, brutal week for large cap technology. Really, the selling kind of culminated on Friday with Nvidia and SMCI breaking down. We'll look at those charts in a second here. The NASDAQ 100 sold off on heavier volume for the week and is now underperforming against the S&P 500. Again, it's been weakening really all year, but now technology has officially broken down against the S&P 500, and which means that most likely for the next cycle in the stock market, technology will probably lag until perhaps maybe later in the year or even next year. So I would look for technology to actually, again, not be a leading sector potentially during the next upcycle in the stock market. The NASDAQ composite also crossing over against the S&P 500, also down over 5% for the week. Major selling pressure and selling off on above average volume. Now jumping into Nvidia, obviously a very important leading stock. The stock actually topped way back in early March, retested that top in late March, and then has been slowly drifting sideways, starting to find the 20-day moving average as resistance, and then broke down on Friday on massive volume, especially after the action in SMCI. Nvidia has a nice downside target around this gap area from back in February, which also kind of intersects with a 30-week moving average. So Nvidia still could have, more room to move to the downside heading into next week. And there's really not a lot of support until you get around the 600 to 700 level in the stock. SMCI broke down on massive volume on Friday after having kind of a failed move higher against the 20-day moving average, gapped lower, closed near the lows of the day. This stock probably has more room to the downside and doesn't have much support either. This stock could easily sell off, between $500 to $600 a share, which would be a massive loss, over 50% from the top in early March. But again, SMCI broke down aggressively on Friday. There's probably more room to the downside before this, move lower is over with. Interestingly, the Dow Jones was flat on the week on above average volume. Again, the Dow Jones has very few technology stocks, and that's what really helped it hold up this week. Most of the selling this week was in large cap tech. Notice how the Dow relative strength against the S&P 500 jumped higher this week as well. Again, usually when the Dow outperforms the S&P 500, we can see that happen back in 2022. That was during a weak market, so that's not really a bullish sign for the overall market, but it shows how weak technology is right now. And the small caps actually outperformed the S&P 500 as well. They were only down close to 3% for the week. They are actually now bumping back into a support area potentially that was formerly resistance. So we'll see if the small caps can hold up around the area they're currently in, and if they do, that would be a bullish sign for the overall market. The small caps are already down about 10% during this correction. Moving to the VIX did come off the highs of the day on Friday, and these occurred during the overnight session when there was some tension in the Middle East. That there were some attacks in different countries in the Middle East, and that caused a spike in the VIX, but that settled back down on Friday. Now the question is, are we getting a little bit of a topping action potentially in the VIX? I would look for to see what happens with the VIX heading into next week. If we get another big reversal in the VIX, with a candlestick with a big wick to the upside next week, that would be an indicator that this, bear move might be getting exhausted and it's time for a bounce. So that's one thing I would look for next week, is to see how the VIX trades and see if this move can sustain itself to the upside. If there's anything bullish in this market in terms of the indices, the breadth of the S&P 500 is starting to get back down to an oversold level, and it actually did bounce at the end of the week because most of the selling was actually, again, in large cap technology stocks. So only 170 stocks in the S&P 500 were down on Friday, actually, even though the index was down for the day. And again, that was just because large cap tech was under heavy selling pressure. So, we're not quite down below 20%, but we're getting down close to that level. And again, typically when, breadth gets oversold is when, enough stocks are basically beat down after a correction that a new long-term rally emerges. So this is one indicator that's starting to finally get down to a bullish level that will, launch the next uptrend. And the breadth in the NASDAQ 100 actually is below 20% now. And again, this is, getting much more favorable now. So, breadth can stay down here for a little bit of time, but it doesn't tend to stay down there for too long once it gets oversold. Like typically, a month or month and a half at the most. So, we'll see how long this does stay around here in the NASDAQ 100. But, overall, things are starting to get more favorable in terms of breadth. And if we look at ultra short term breadth, this is the percentage of stocks above the 20-day moving average in the S&P 500. And again, this turned up at the end of last week, even during the massive, selling on Friday. So overall, I think there's good potential for the selling in large cap technology to continue into next week, but there's also good potential for a bounce starting next week as well in the overall markets, because these downtrends typically don't occur in a straight line either. So there's typically, at least one or two waves lower, interrupted by bounces, and there's good potential for the oversold bounce to start next week. So the market remains in correction. It definitely is a time to be cautious, patient. There's some alternative sectors that might be worth looking at for trades. We'll talk about those in the stage 2 pullback section. But other than that, the big opportunity is going to emerge once this correction is over and the S&P 500 resumes higher and powers individual stocks higher. So we're just not quite there yet. It's time to be patient and wait for a great buying opportunity that's coming soon in the stock market.